Good day, everyone. Welcome back to Profit Arena. In today's video, I'm going to be explaining the concept of supply and demand. I'm going to be showing you where the big boys enters into the market, where they exit the market. You might have small capital, but you can also trade like the big boys do, right? Leveraging on the information I'll be sharing with you guys in this video. So I would advise you stay to the end, right? At the end of this video, there is a quiz to test your understanding of the concepts that will be discussed. I'll need you to answer the quiz in the comment section. I'll go through your response and correct you if need be, or congratulate you if you get it correctly, right? So without further ado, let's dive into the video. So what is a supply and a demand zone? Right, I refer to them as zones because they are actually areas where money enters into them, or money flows into the market, right? Either for buy or for sales. Now, price does not move itself, right? Liquidity moves price. So whenever liquidity is being pumped into the market, price moves, right? And liquidity is simply money, right? Liquidity is money. So when you have price moving this way in a bearish or in a bullish trend, something is responsible for that movement, right? In the case of a bullish market, we see there is a demand zone that's responsible for price movement, right? We say there are demand zones responsible for pushing price to the upside, right? And for sales, we say there are supply zones responsible for the sell. Now, this applies to our local market as well. When the value of a particular product is in high demand, the price of that product tends to skyrocket, right? And likewise, when everyone is selling a particular product, right? When the supply of a particular product is high, the demand will drop, right, drastically. So this is what happens in the market. So the supply zones are the zones where sales starts from, right, to push price down, and the demand zones are zones where the buys start from, right, where liquidity enters into the market to push price to the upside to continue breaking structures to the upside. All right. Now, there are rules for trading supply and demand. In this video, I'm going to show you guys how you can actually trade supply and demands. These are the rules, right? So we're going to be discussing those rules so that you can, even without any knowledge, if this is the only video you watch about technical analysis, you can actually use this information I'll be sharing with you guys now to trade the financial market using this set of rules, right? So what's the number one rule for trading supply and demand? Having identified that demand zones are sell zones and supply zones are buy zones. Now, before we do that, let's quickly just look at examples on the chart so we know what we are doing, right? This right here is a supply zone. Remember we say the sell zones are the supply zone, right? So this is a supply zone responsible for a sell down, right? This is a supply zone responsible for a sell down, right? This right here is a supply zone. This is a supply zone, right? This is also a supply zone, right? Responsible for a sell down. Now, I need you to, now you can actually use one candle or two candles combination for your supply zones, but in a simple term, or to make it easy for you to identify a supply zone, you can say that your supply zone, your supply zone is the last bullish candle. Your supply zone is the last buy candle before the aggressive sell, right? After this candle, see the sell. So this is your supply zone. This was the zone, this is the candle that was responsible for this aggressive sell to the downside, right? And also for your buy scenarios, right? For your buy scenarios, the sell candle before the aggressive buy, we refer to them as what, as the supply candle or the supply zone. Because after this bearish candle, look what happened afterwards. Price moved impulsively, right? Serious impulse. So it means there is something here. There is something in this zone that there is something here, right, that was responsible for this push, right? So this zone, we refer to them as well as the demand zone, while zones that are responsible for sales, We refer to them, zones like this, responsible for sell. We refer to them as well as the supply zones, right? So that's how you identify. You can go on and on your chart to identify the, lots of supply zones. This is another supply zone. This is another supply zone responsible for the sell down. This is another supply zone responsible for the sell down, right? And this is a demand zone. This is a demand zone responsible for this buy to the upside. This is a demand zone, right? This is also a demand zone responsible for the buy to the upside, right? So this is how you identify your demand and your supply zones, right? So let's see how we can use these rules, these 6 rules, to actually pick a trade and see if we will make money trading with these rules, right? So what's the number one? The number one rule is to identify the trend on the higher time frame, right? You want to know the direction of the market. Remember, the trend has to be your friend always. The trend is your friend. When you try to go against the trend, you're going to lose money. So always make the trend your friend. If you want to trade like the big banks do, make the trend your friend, because your money cannot actually move the market, right? So you're just going to ride along with the market instead, right? So we're going to go to the higher time frame, like the daily time frame or the 1 week time frame, to see the overview of price, right? To actually know where price is headed. So when we know where price is headed, we can actually be looking out for opportunity that suits the trend, right? So this is our daily time frame. This is our daily time frame. Let's check out the weekly time frame to get our weekly overview. What's going on? Okay, I think my network, my connection is acting up. That's not nice. Okay, so guys, forgive me. All right, so this is our daily time frame. This is our daily time frame right here. Now we see that price is actually, Bitcoin is bullish, right? This is the overall trend of BTC. So we see that Bitcoin is actually bullish. So with a series of higher highs created, we see that Bitcoin is bullish even on the daily. I believe if we go to the weekly, okay, look at the weekly, right? The weekly time frame actually gave us a perfect trend. Just look at it. This is a bullish trend, right? Bitcoin has been buying for a long time, right? So you wouldn't want to be selling Bitcoin. I mean, you could actually sell, right? You could actually sell, but you wouldn't just want to prioritize selling, since it's a buying market, right? You want to be looking for more buy opportunities than sell. So since we've agreed that price is bullish, let's go to the lower time frame to actually look for opportunities, for buy opportunities, right? So so this is our number one checklist has been met. We've identified the trend. So we are bullish, right? We are bullish. So we've gotten our number one requirement. The number two requirement says identify the recent swing structure, right? So let me just cut price. Let me cut price. Let me just bring price back, right? So this is what we are working with right now. So we are going to identify the recent swing structure. Now, how do you identify the recent swing structure? Just mark out the recent break of structures, right? This price was actually trending down, breaking structures to the downside. So this was the last supply zone we had. This was the zone that sold price, right, to the downside. After, remember, we broke the structure and then sold down. So this is our supply zone. Now, what do we expect? We don't expect price to actually take out the supply zone. We expect price to do something like this, come back to retest the supply zone and sell, right? This was this should have been our anticipation. But instead, price changed direction, right? Price took out this supply zone. Price took out the supply zone. Now, whenever price takes a supply zone, it means it's called a change of character, right? It's called change of character, CHO, right? We refer to it as change of character. It means price is about to go the other way around. Now, since price, and remember our overall trend is bullish trend, right? So we are actually looking, since this price has taken out this supply zone, the next requirement here says, so number one is to check out the trend. Number two, check out the recent swing structure. So since this has been taken out, this means here is our now swing structure. Here is our new swing structure, right? Where this zone is our swing high, and this zone here is our swing low, right? So we have a new swing structure. And the number three requirement says mark the supply or the demand zone that caused the BOS, that caused the break of structure or the change of character, right? So we are going to mark the supply or the demand zone. In this case, we are using the demand zone, right? So we're just going to go ahead and mark this zone. This is the zone. This is the bullish candle, the bearish candle that was responsible for it, right? I like to just mark only the body of the candle most of the time. So now we've marked out the zone that was responsible for this push to the upside. Also, if you go to lower time frame, if you go to the 15 minutes time frame, you can define this. You can define the supply zone. Look at our supply zone on the 15 minutes, right? This zone here. So you can see this is our supply zone on the 15 minutes. So let's go back to the 1 hour. So this is how it looks like on the 1 hour, our supply zone on the 15 minutes. So let's even use 15 minutes, right? Let's just use the 15 minutes time frame. So our third requirement has been met. So the number 4 is look out for price inefficiency or imbalance. All right. Now we're going to check. Now, is there an imbalance or price inefficiency? Now, the reason why price inefficiency is important when you're considering your supply and demand zone is because when there's an imbalance, it means that the buyer or the seller aggressively pushed price. It means they outmuscled the other party, right? So that means they can continue with the trend. That means they can keep the momentum going. But in a situation where you have a break of structure or you have a change of character that lacks price inefficiency or an imbalance, it means that zone might not hold, right? Price might actually take out that zone. So you want to look out for an imbalance within your swing structure. So in this scenario, we actually have price inefficiency here. Look at imbalance and then imbalance as well. Now, what is an imbalance? An imbalance is space between candles, right? Price is not supposed to leave space in between candles. That's not that's not an ideal market. In an ideal market, there ought to be, each candles ought to be overlapped, right? So whenever price leaves space like this, it will definitely come back to fill it just to show respect to the other party, right? So that is the psychology behind it. So we actually have price inefficiency here. So our fourth checklist has been marked, and then the number 5th is wait for price to come back to the zone. So now we are going to do nothing. We're just going to wait for price to come back to this zone. And the number 6 says set your limit. So what are we going to do? We're just going to place our buy position, right? We're going to place our buy position here, and we're going to place our stop loss below this low here. So we're just going to, and our take profit will be this high, right? We expect price to create another high. So this is going to be our take profit. This zone here is going to be our take profit. So we're just going to wait for price to come all the way down here and give us a good trade. So let's play price and see what happens. So, okay, that was actually very fast. Okay, we've been tagged. Price has our trade has been tagged. Our trade has been tagged here. We are in the trade now. You see, we are in the trade now. So let's see what is going to happen with price. Okay. Okay, let's see how it's going to go. Still playing out. And then boom, boom, right? Boom. Price has played out, right? Giving us a very, very, very good trade, right? A very good trade. So now with this our high here, price gave us almost 4 times our money, right? So we've made over 4 times our money from just this concept, right? From this trade we took. Now we're going to go back to our higher time frame again, which is 1 hour, right? Let's go to our higher time frame again at 1 hour and see if we can look out for another trade. Remember, this is another confirmation. Remember, now we have two. Let me push this aside. Remember, here was our first break of our first this was our change of character, right? So here was also our first break of structure. Now we have our second break of structure, right, to the upside. So now we have 1 and 2. This further confirms that price is actually buying, right? Price is buying. So what are we going to look for next? Since we agree that price is buying, we are going to look out for the zone that was responsible for this break as well. Remember, it was a zone that was responsible, just like the zone we got here, right? It's also a zone that was responsible for this new break of structure now, right? So we're going to look for that zone and also take advantage of price as well, right? So where is that zone? Remember, we said the last bearish candle, right? The last bearish candle or group of candles before the momentum started, before the sell momentum started, right? So this is what our zone. So we're going to mark out this zone, right? And so this is our zone. This is our zone right here. So we are going to place our sell position again. Sorry, our buy position at this zone. We're going to place our buy position at this zone. Remember, and then we'll place our stop loss below this low here as well. And we are going to target wherever price starts tracing from this high right here, right? This high here. So we're going to target this zone. So let's play price and see. Let's see. Okay. Let's see if we get tagged in. Let's see if price will tag us in or leave us behind. Okay, we've been tagged in. All right, we've been tagged in. Okay, that's beautiful. Let's see if we hit TP or stop loss. Let's see what is going to happen. Okay. So this is how price moves in the real market, right? This is a replay button of how price actually moved. Boom, boom, right? We've just hit our take profit. So you can see how we use this concept to actually get 2 trade from this zone, right? How we got 2 trade here, right? And this first trade was almost 4 times our money. This second trade was 3.3 of our money, right? So you can see these 2 trades already gave us over 7%, right? Over 7 times, not 7%, actually 7 times of whatever money we risk, right, on this trade. So this is how you trade the supply and the demand zone, trading with the big banks, right? Because this is where the big banks come into the market. This is how they move price, and you could actually just leverage on this information and make money just like the big banks do. So I need you to watch this video over and over again until you get this concept correctly. All right. So I hope you found value in this video. Go ahead and subscribe if you haven't, and share this video with your friends so they can also learn this concept as well, right? So ensure to answer the quiz in the comment section. I will go through your responses and correct you if need be, or congratulate you if you get them correctly. So that'll be all for now, guys. Peace.